This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
At least 6 more oil tankers were steering clear of the southern Red Sea on Monday, as disruptions increase on the vital route for energy shipping in the wake of U.S.-led strikes against Houthi targets in Yemen. Following the U.S. and British strikes, the U.S.-led Combined Maritime Forces, CMF, based in Bahrain on Friday warned all ships to avoid the Bab al-Mandab Strait at the south end of the Red Sea for several days, tanker body INTERTANKO said. Prior to the strikes, it had been mostly container ships which were avoiding the Red Sea, with oil tanker traffic largely unchanged in December.
Oil prices were mixed on Tuesday, after losses in the previous session, as markets weighed broad economic concerns against weather-related U.S. demand-supply issues and continued tensions in the Middle East that led to more tanker diversions. Brent crude futures rose 5 cents, or about 0.06%, to $78.20 a barrel at 0334 GMT. The contract had earlier settled 14 cents lower on Monday. U.S. West Texas Intermediate crude was down 20 cents, or 0.28%, at $72.48 per barrel after a U.S. public holiday on Monday.
Moving on to the top news in the energy sector.
U.S. natural gas supplies have fallen by the most in over a year as extreme cold froze wells, while heating demand was on track to hit a record on Tuesday and lift both power and gas prices to multi-year highs. The Arctic blast sent temperatures plummeting across a vast swath of the U.S., leading to power outages in the Pacific Northwest and elsewhere, and snarling everything from political campaigning to football games and travel. Analysts boosted earlier forecasts for record gas demand on Tuesday but reduced their outlook for gas use on Monday, in part because many businesses and government offices will remain shut for the long U.S. Martin Luther King Jr. Day holiday weekend.
4 tankers used for shipments of Qatari liquefied natural gas, LNG, have resumed course after pausing for several days amid maritime attacks by Yemen's Iran-aligned Houthis in the Red Sea. LSEG ship tracking data showed on Tuesday. The Houthi attacks, in what they call a bid to support Palestinians in the war with Israel, have disrupted trade on the main east-west route that makes up about 12% of global shipping traffic. On Monday, the Houthi movement vowed to widen its targets in the Red Sea region to U.S. ships, following U.S. and British strikes on its sites in Yemen. Next, we have the top news in metal markets. China's economy is about to grow surprisingly fast again. That, at least, is the message sent by the stock performance of some of the world's biggest iron ore miners down under, which exports to the People's Republic some 80% of its supply of the key raw material for steel. Fortescue and Rio Tinto's ASX-listed shares hit a record high at the start of the year, days after BHP's traded at their best in almost 2 years. They have dropped back somewhat since, but the enterprises still trade at EBITDA multiples not seen for years, if ever. Chances are, the rally is overdone. Granted, iron ore has performed better than expected. Fears of a broad slowdown in China sent prices down to around $100 a ton last August.
The London Metal Exchange, LME, plans to suspend or delist 10% of its listed metals brands in coming months until their producers provide it with their responsible sourcing reports, the exchange said on Monday. The move is a step in the campaign, which the world's largest and oldest metals trading venue, owned by Hong Kong Exchanges and Clearing, launched in 2019 seeking to clean up global trade chains from metal tainted by child labor, corruption or conflict financing. The LME fully expects that a proportion of these brands will be able to relist in due course, once they have completed the work to address the requirements of the policy, it said in a statement.
We will now look at the top news in the agricultural sector.
The European Union's eastern states are demanding the EU impose import duties on Ukraine grains, citing unfair competition, Hungary's agricultural ministry said on Monday. The ministry said the farm ministers from Bulgaria, Poland, Hungary, Romania and Slovakia had sent a letter to the European Commission requesting the measures, saying cheaper agricultural products from Ukraine are eating into their export markets. The 5 signatories are among 6 EU member states that produce significantly more wheat and maize than they need, which is key for European food safety and the EU's strategic sovereignty, the ministers said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.